You will only get what you're worth if you know your value and you can articulate it.
Welcome to The Path to Wealth, the show about well-being, fulfillment, and financial freedom. And I'm your host, Hennche. Welcome back to The Path to Wealth. I'm your host, Hennche. Today we have Christopher Larsen, co-founder of Wealthward Capital and the charismatic host of Tech Careers and Money Talk. Christopher's mission is to empower tech employees with commercial real estate investment opportunities, guiding them on the path to financial success. In 2022, Christopher achieved a remarkable milestone by transitioning from his W-2 job to embrace a lifestyle tailored to his own desires, being financially independent. Established his own do-it-yourself family office and built a company centered around his ideal lifestyle. As of today, he manages over $200 million assets under management while educating over 1,000 tech employees on becoming proficient real estate investors. Let's dive right in and welcome to the show, Christopher.
Thanks so much, Hannes. I am excited to be here and just have this conversation. I know that we're like-minded individuals. We're on a similar path, and I always enjoy these conversations, and I get a lot out of them too.
Yeah, likewise. And it's so cool because Christopher and me, we've met over time, also in person. We did get the chance to visit you in Austin once, which was really nice to connect and see the vision that you're unfolding for yourself and your family. And maybe you can help us understand, where did your original drive for financial independence come from? Where did that understanding that there is a different life to be lived for your family come from?
It took time to really start having the vision. I am so excited today. It's easy for people to find the conversation online around, financial independence, retire early, or choose financial independence. But in, 2012, I think for us, we had a vision that we could start generating income and maybe taking pressure off of our W-2 income right after my first IPO in 2012. In 2012, the company that I was working called Splunk went through an IPO, and my wife and I went through what's called a sudden wealth event, where there was some challenges and things around that, but coming out of it, because we're both aligned on we want to make sure that we're being fiscally prudent, we realized that with this additional equity, we could start deploying it into different asset classes and getting income. We'd both read Robert Kiyosaki's book, and we realized, okay, wait, if we have a portion of this technology equity moved into commercial real estate, passive, where we're not actually having to now trade our time for money again, but we're actually able to get income. Hey, maybe we could take a few more vacations. Maybe we could take a sabbatical. I mean, that was where it really started. And then as we went to work, and as, over time and over years, we realized, wait a second, we're deploying enough capital that we can replace a paycheck. We can replace two paychecks. And as things started to evolve around us and we started seeing lifestyle by design, people then transitioning from full-time W-2 with, a paycheck replaced to creating jobs that were crafted around their lifestyle, or companies that were crafted around their lifestyle, the vision started to become clearer that this was something that we could do. And I think ultimately, though, when you get back to your core question, like what was the driver, is I wanted to be at a place when my sons got to, 11 or 12 years old, that I could really walk alongside them into adulthood, and I wasn't chained to a desk. Was not chained to full-time responsibilities, and I could really be spending more time with them. That was the main driver for me.
Yeah. And I think this is very relatable and powerful, is that, to be there for those family events and not just like, having to be in a desk or being one of those road warriors, where you're a high paid consultant and you're just flying around the country, but you're barely there for your kids when they're actually having those live events growing up.
Yeah, you are, and you're right. And technology, I think, like industries that you participate in as well, from a service industry perspective, it's high demand. I mean, when you're in a software as a service company where the expectation is the software is up 24 hours a day, 7 days a week, you have customers that are global, your phone's on, and it's easy to transition into a 24/7 lifestyle. And it's interesting because that particular lifestyle can then, to your point, you get addicted almost to the income, you get addicted to the equity. And if you're not careful and you let it bleed into your lifestyle, I say that, the term I use is the golden handcuffs can lead you to a golden jail where you're literally chained there. And I think focusing on the vision of really where you want to spend the precious time in your life you can't get back. I mean, once your kids turn, 18, they're gone. Like, your time with them is going to change. So you need to be very focused on that. And then it's also trying to think about, how do you really want to live? And I really resonate with your wealthy, with wellness and wealth. And I was literally thinking about that this morning in my morning routine, because those two need to go hand in hand. Because if you're pursuing wealth and you don't have a wellness component, you can end up having all the things that you want, but being incredibly lonely and not being connected with people.
Yeah, I agree. And I think that's the only worthwhile journey to make it in a way where you remain connected to yourself and life itself, and where you get out on the other end and you still have a body that wants to live, and you didn't kill yourself just to have a bunch of material success anecdotes and, whatever you want to call it.
Well, and I like you bringing up that topic, because this concept of financial independence, getting to financial independence, isn't about multi-million dollars. It's not. It's really about, how do you generate enough income, what you need, so that you can actually get freedom. And it's about, I also don't think it's about extreme saving and cutting out all the coffees. I think it's trying to find a balance of right. It's trying to find a balance of what is enough, and then being able to create a lifestyle that you're comfortable with. Because I think people, it's interesting. I've been reading lately about people who've executed the FIRE movement, saved a ton of money, retired very early, and then now they're also unfulfilled because they didn't have a purpose going into this retirement. And I think that's also something too that we need to keep our eye on. Is I transitioned out of a full-time W-2 job to continue to educate people, to turn back into technology employees who are my people, and to try and help them live better, to help them see a different way of living. And that's my purpose. That's the purpose behind my podcast. And I don't ever want to stop. I want to just create something that, as you mentioned in the beginning of the show, is just crafted around my lifestyle, so that I can do this during the hours where my children are in school, and when they're out, I'm spending time with them.
Yeah. So let's say I'm someone in tech, maybe I'm in my 30s or something. I'm making six figures, but I have no idea what you're talking about. How do you start somebody to transition from having that employee mindset in tech to preparing their own financial independence path?
Well, the first thing, so there's a few steps that I walk people through, and my program is called From Equity to Exit. And it's there intentionally because, first and foremost, there's a lot of tech people that do not understand, how do you work for tech equity as a wealth building strategy. And that's step number one that I want to get them grounded out in. Is there's plenty of tech people, and I know myself, I spent the first 10 years of my career working in technology for one of those consulting companies. I was a young road warrior. I didn't have a family, and I was appreciative of all the travel. But I didn't realize that I was missing out on a lot of additional compensation because I wasn't working for equity. And that's where it's not only people with tech skills. You can be in marketing, you can be in sales, you can be in finance, but trading your time and talent for salary and equity, that's going to get you career compounding, a career compensation compounding. You're going to get, on average, for people who go to work for public tech companies where it's already liquid, low risk, are going to make on average 30% more per year than people who don't.
Oh, wow.
And that's going to allow you to get this additional component that you can then directly invest. And so that's the first part of my program, is making sure that people understand, how do you work for equity as a wealth building strategy? Because many people are doing it and they just haven't talked about it. And that's what Tech Careers and Money Talk is about. And also my book that's coming out later this year. And I'm also working on some group coaching programs. The second part then is, how do you take the equity and start generating cash flow? And this is a gap that you and I are very passionate about, that we fill, because many technology employees who are mid-career have been working for equity. Their portfolio looks something like this. They're going to have 70 to 80% of their portfolio in a single stock. It's as shocking as that sounds, it's true, because people work for a company, they make a lot of equity, and they think their best thinking got them there, so I'm just going to let it ride. And it's a very, very risky proposition because it's not diversified. And then the rest of their portfolio is going to be some level of index funds, maybe some other tech stocks, and then they'll invest in venture capital because they believe, okay, venture will allow me to then 10x these dollars. And that type of portfolio leads to a lot of heartbreak. And I've heard a lot of very, very sad stories. So then I try and educate them on, how do you think about a portfolio strategy where first and foremost, you're getting some market diversification, and then walking them through programs like you and I have, where I educate them on what alternative investments are, walking them through how real estate is the most powerful alternative investment there is. And I'll pause on this for a moment because I want to make sure that everybody hears this, which is, real estate is so powerful because there's 4 ways that you make money in real estate. 4 ways. Number 1 is cash flow. And you should always invest for cash flow. And this is what generates the income. And that is one of the most powerful features. Number 2 is appreciation, which should be considered a byproduct. You don't want to invest for appreciation, but when you have an asset that's cash flowing and appreciating, you're winning. You also have equity pay down. Sometimes you're in loans and things where the renters are actually paying down the equity, and so that actually goes to you as an owner. And then the third is the depreciation, the tax benefit. There's not a lot of other assets that have that magic combination. And if you make it work for you, you can then start generating a portion of you can move a portion of your portfolio there that generates income that is tax protected. And the secret is, you don't need as much real estate income to replace your W-2 income. If you're making $200,000 a year W-2 income, you just need $175,000 a year in real estate income, because the depreciation will offset that, give you a lower tax burden. That's, again, another secret. So then it's walking them through that. Okay, how do I start shaping my portfolio? And then the third component is really to get to the exit. Like, how do they position themselves for an exit? And many people see the opportunity, especially in tech, to build a professional brand where then they can either serve people on a they've created a business and they're serving individuals similar to what I am, or some of them can take their expertise and do part-time consulting back into tech. And the combination of having a portfolio and a strong personal brand can create options. And you and I, as real estate investors, where there's a lot of options, a lot of creative things to do, that's what you want on the table, is you want options.
Yeah. How do you help them navigate the exit piece of the puzzle? Because, see, a couple of years ago, I remember the CEO of Pepsi. She was like her entire wealth was in Pepsi, basically. And she's like, I love Pepsi. And like, her public statement was basically saying she will always be invested in Pepsi. Right. And I was like, wow, that's like I'm not sure how I would die for that statement, but she really was like so invested in the company. It was her life's work basically. And how do you help somebody prepare for that exit so that they actually feel like they're transitioning where it makes sense to them? Because valuations are always like, you can't look into we all don't have a crystal ball,
Right.
And you don't want to exit Apple before they bring out the iPhone and miss the next 20 years on that.
Right. Well, and this is where so exit to me is leaving the W-2 and transitioning. I think what you may be speaking about is more of the divesting, right? Is divesting is one of those conversations where it can be challenging. What I am able to uniquely offer is I am able to open and demonstrate what I did, right? And so the companies that I went through IPO with, I haven't exited those positions completely, but I've radically downsized them so that they are a portion of my portfolio where I can still follow the companies, participate in the growth and the upside of them. And it goes back to, what's your motivation? If your motivation is truly that you want to get to be financially independent, then you're going to study the portfolios of other people that have done it. And it's interesting, like somebody at Pepsi who's got multi-millions of dollars inside of a single stock, they can do a lot of creative things with that. They can take loans against it. Like they can do a lot of things, but it's such a large value, the fluctuation probably isn't going to hurt them. But when you're talking with somebody who's holding maybe $4 or $5 million in a single stock and they need to get a portion of that, really active in generating income for them, the conversation gets a lot easier. And I think showing them, again, my whole, I am of the mindset that I learn from people who've done it. And that's what I do, is I just show them what I've done. And some people are going to opt in, find it easier, and others aren't.
Yeah. Yeah, I could see that part very challenging. And I took exit for the actual financial exit, but if you're meaning it's the W-2 exit, it's like actually stepping into financial independence and freedom and living a different life.
And I'll tell you, I'll give you a couple of examples. I mean, I know myself, after we went through our first IPO and we had 90% of our wealth in a single stock, when it had bad days on the market and it had a 10% drop, 15% drop, that's a gut punch. And what I've come to find is that people who are in that position, they're exhausted mentally. And when you're able to demonstrate to them, how to diversify and the benefits of that, they start to, as they experience it, they start to get more comfort, more peace of mind, and they realize, okay, this is a more practical thing to do.
Yeah. There's also this one aspect about real estate. It doesn't get evaluated every second of the day.
Right.
So you don't have a tracker that you wake up to in the morning. I'm like, obviously we kind of know where our financials are month to month, and we know our net operating income and all of that, and we know where the cap rates are and where the overall, but we don't look at it in the same way that we just pull up an app on our phone and I'm like, oh my God, my portfolio took like this kind of hit. And it's like, so I think that the part of that is always very comforting for me as an investor. The psychology of it is different because I don't have that real-time update, even so I'm aware of the overall value fluctuation, but I can just digest it better.
You can digest it better. And I also think that the interesting point I want to tease out of what you just said is when you start experiencing, this to me is people have to experience this over time. I do think that as you get investing, you can understand the theory, but nothing is like experiencing it. And I know as we started experiencing these high interest rates, drops in the market, and I saw the stock side of my portfolio decrease, and I, had some people call me panicked and frustrated. What I was able to experience, because I have, 50% of my net worth inside of real estate, is all of a sudden, all of the rising inflation is increasing rents on that side, income is going better. We've got long-term fixed interest rates. You have this other side of your portfolio that's doing very well. Yep. Having gone through that in 2020 and then through this latest cycle, you start understanding that a nice, healthy, balanced portfolio that's in traditional investments, that's in alternative investments like real estate, it balances it out. And this is how, the ultra wealthy navigate all these things and are not as worried and concerned and have different experiences because they have a portfolio that's built to weather these storms.
Yeah. And I think this is also part of our strategy. It's like, I want to weather storms. I don't see, my goal is never to optimize just for the biggest number behind the comma. It's really just like, I want to be time and free in terms of where I can be, and just make sure that I can take care of my lifestyle. And that's what I like to optimize for.
And that's really what I like to optimize for. And I think where people need to get educated is, and this is also, I think, a mindset that comes from having a portfolio that's just really in stocks and equities, is the majority of equity today are growth stocks. So what does that mean? Is that you're looking to get that number really high so you can start draining it, and you want to then die before it hits zero. Like, that's truly what the 4% rule is about, is you're hoping that it's going to grow faster than you're going to spend the money on a race to the bottom. Versus when you have a balanced portfolio that's more of a traditional, pre-2008 60-40 portfolio, where you have 40% in income, 60% in growth, and then as you get to 40, you start moving that percent, up with each year. So you go to 41, 42%, 50, and start going, and you're getting income. And so the capital amount is not decreasing. You're getting actually cash flow off of it, and some of those assets are appreciating. You're building a financial fortress. You're building something that can weather not just your life, multiple generations, multiple recessions, and that's truly the goal. And this is where it's interesting that technology employees can make millions of dollars, but not have the mindset or understanding of people that have had high net worth for years. And that's part of what I'm trying to educate them, is that it's not just getting the money. You have to now start thinking differently.
I think this is such a crucial piece to the puzzle, because I guess everybody's familiar with lottery winner stories of people that come to sudden wealth and have no idea how to, deal with it. And, I think the average time from broke to broke for a lottery winner is like 5 years or so. They win, they blow it all, and then they're back to it.
They do. And so you there's a couple things there to tease out in that conversation. Number one is sudden wealth syndrome is a psychological syndrome. And I am passionate about educating people that it can be debilitating. Even though I was somebody that studied and knew stock investing really well, I didn't really understand real estate investing that well when I went through my first sudden wealth event in 2012. I found myself for days feeling depressed, feeling isolated, feeling alone, feeling like an imposter, and even struggling, like, is this really real? As I was looking at the stock account and we were in a 6-month lockout, like, is this really real? Are we really going to get this? It was debilitating, and it was really sharing these feelings with my wife, talking to others, getting some therapy on this that helped me get out of that. So that's number one, is you're right. Sudden wealth syndrome is a thing. Number two is when you get a lot of money, whatever mindset you had around money before, whatever habits you had about money before, those are going to be 10x'd. And so, so for myself and my wife, we're savers. Like, we're savers first and foremost, and then we invest. So we did not change our lifestyle. Our whole thing was, how do we put this money in a place where we can't touch it? We can get educated on how to manage it and invest it. But we literally did not want to touch it. We did take out enough, and we paid off all of our student loans, and we made the decision to just, okay, let's get out of that. Let's streamline our own cash flow. But if you're somebody that is a spender, a gifter, and there's people that do that even when they don't have any money, they run up credit card bills doing that, and you get a lot of money, that's going to 10x. And so that's important that people understand their mindset. Then the third thing is the financial education that we all have access to right now, that's the easiest to find, will keep you middle class, which is turning over all your money to a wealth advisor, stuffing it all in your 401k. But there's no education on alternative investments. There's no education on, even thinking about private equity, investing in, I'm taking private equity, not from what we do in real estate, but investing in small to medium businesses and investing in private equity firms that run businesses that provide cash flow to people. Like there's a whole suite of investments and way to manage money that is not in the normal media, and it's getting more exposure right now. But those three things, sudden wealth syndrome, your current money mindset, and not understanding how to think like a high net worth individual, those things will take all your money away.
I love the way how you framed that basically our habits get amplified. And the gift one you mentioned, I literally just met a woman in the Hamptons. She's in her 80s. She's still working for a company that doesn't appreciate her, and they won't give her a raise because they know if she quits, she won't never get a job anywhere. And she gave away her entire retirement money as gifts, like all of it. And I was like, why would you do that? She's like, well, I just like theater and I wanted to support theater. And she supported all of those off-Broadway shows, but she never put on the oxygen mask first. Like she still relied on her job, but she gave away all of her retirement savings.
Yeah.
And it just blew my mind. And then she topped the story. She was like, when she was young with her respective husband back then, they actually made $1 million a year in like the 80s. And they blew it all. So she had like two major wealthy ones. One was just being wealthy when they were younger as a couple. They blew all of that. And then when she actually got her retirement money, she gave all of it away to find herself in like old age poverty, still working in her 80s.
Yeah.
And I was like, wow. And that was like such a life lesson to me to talk to her. I'm like, I just have to be smarter around that. Like,
well, we do and so that's something that I think doesn't get discussed enough on some of these podcasts, and in some of these events I know that we both share and go to get educated on investing in real estate, is money mindset. And money mindset, it is so important that we have to go back and analyze and be aware of what program did we get from our family of origin.
Yeah.
Right? Because we all get something from there, good, bad, or ugly. And also, how are we managing money to deal with different emotions, right? Because just as I am a comfort eater, right? If I get stressed or anything, this is where we actually literally, we have a lock box in my house that has all the sweets in it that my wife keeps from my sons and myself. And it's a little code. But if she leaves something out, if there's left out a bottle of Nutella, you know what I mean? I'm going to work on that thing. I'm going to go if I'm stressed, you know what I mean?
Yeah.
And the thing is it's the same thing with this gifting. I mean, I think this is a very interesting example. And I think I've seen some interesting examples as well as where, she can't help herself. This is her blind spot. Something is going on, and she is now continuing to be on this treadmill, and is she happy? Did she fulfill her life's mission by giving all that money to the theater, and now she can, work, live in poverty, and die happy? I don't know. But I think that people need to understand their mindset, especially as they're working to build wealth, and have conversations around it. So important.
Yeah. And another thing I want to uncover a little bit, you mentioned you felt like an imposter when the IPO happened. And that's the second time this week I'm hearing this from a tech employee who actually had a big exit. Like, why do you feel like an imposter when it actually happened? Like you have proof in your account that it happened, that you were part of this.
You have, but I think what it is for me, it was the amount of money was, from my perspective. And again, it wasn't, it was multiple seven figures, and it was enough to say like you're asking yourself, am I really worth it? Did I really get this? The answer ultimately is yes. Like, I mean, this is where I came out of this realizing like, oh, wow, like this is now my new value in the marketplace. Like I can go and garner this wage. But when you've experienced for the first time, there's a couple things that play into the imposter and I'm happy to get into, my mental state of mind and share that with you, Hannes, is first and foremost, there's this question of, is it real? Because what happens is you get this stock account and all of a sudden you have all this money, but you can't touch it for 6 months. You can just look at it. It's what's called a lockout period. And the reason that they do that is because they don't want everybody to sell off right away and cause a lot of fluctuation in the market. They want the stock price to stabilize. And then they start giving you windows where you can trade, and it's a little bit more predictable. And so there's the question of, is it real? And I think it just opens up this whole line of thinking. If you're like, well, is it really real? Then there is this, I think imposter syndrome always starts with like, do I deserve this? And one of the antidotes that I realized to this, and this is also, I think, a great strategy for tech employees, is when I went down, one of the exercises I was encouraged to do is I went down and wrote down everything that I did to get to that point. Who were the people I hired? What were the people that I did? What was some of the previous experience that led me to there? And when I was able to look at that writing and realize that I was uniquely positioned to do my role well, better than other people in my industry, I was like, oh no, I'm not an imposter. Like, I earned this seat. I earned it.
Yeah.
But the interesting thing is in tech is many of us keep moving on from project to project, from thing to thing, and we don't actually sit down and really understand our own value. We don't understand what we've done. And this is where my walking away, my addressing my imposter syndrome by really sitting down, writing out my career story, understanding my skills, my experience, the results that I helped deliver, all of a sudden I was marked to a new market. And I realized coming out of that I was now uniquely positioned going forward to provide this value to other companies going through an IPO event. And I started positioning my career so that my phone rang when other companies were 18 to 24 months from an IPO. And after that, I worked for 3 more companies, and 2 of them went through IPOs.
Nice. And I think I have to do that exercise because I remember there are a couple of times when I just put a different price tag on my services. And then the first couple of times when people actually paid me, I'm like, can't believe they're giving me that much money for what I'm doing.
Right?
But I just had the guts to like, okay, this is my new price tag. I don't show up unless you pay me that. And they're like, okay, yeah, sounds good. And then the first couple of times it actually cleared. I'm like, okay, like why would people give me that kind of money? But I think at the end of the day, now that I'm listening to you, it's part of that unique positioning. It's like for this particular job, having the way I can execute it, or maybe also who I am as a person in terms of the interaction, social interaction, I'm the best suited individual, and they're very, very willing to pay that kind of money for it. And I think it takes quite. I think actually this is one of the biggest wealth hurdles for many of us.
Yes,
is to get over that and like get out of that. Wow, do I really deserve that? Because I'm definitely guilty of sabotaging myself out of a lot more money that I could have already made.
And this is the key thing that people need to understand. And this is in tech, this is in your industry and all other industries, is you will only get what you're worth if you know your value. You will only get what you're worth if you know your value and you can articulate it. And this is what I teach people how to do, is they need to be able to establish and understand the value of their professional brand and market to market, and then be able to talk about in the words of experience, of education, and results, what they've delivered over time, to be able to then negotiate for what they're truly worth. And when you know this, it's incredibly empowering.
Yeah. And the interesting thing is, to kind of add on what you said, is every single time I decided to put a new price tag on it, I found somebody in the market who was willing to pay it.
Yeah.
It was a different type of client usually, but it was only when I decided my time is worth more,
right,
that the opportunity kind of showed up. And I did always find somebody who was like, yeah, okay, if you provide that kind of service in that kind of manner, Yeah, of course I pay you that kind of money. And that's where we have to break out of that unconscious shell of whatever we culturally or maybe from family or the people around us, what has been catered to us.
Right?
Because it might not actually speak for the potential that we carry with us.
It's true. It's true. And nobody is going to write our story for us, right? Unless you achieve something at a very certain level. You may have some biographers and people that want to seek you out. But for us, who are really trying to transition to a lifestyle by design and are really trying to, live modestly, we're going to have to write our own story. We need to be able to articulate our own value. In fact, the other day, I was writing about this on LinkedIn that you need to be able to, you're the asset, right? In these negotiations for compensation, you are the asset that's sitting across from this compensation, and you have to describe your value. And somebody commented, which I thought was so true, that if an interviewer is sitting across from you and they go, "Tell me about you," that should be the easiest question for you to answer, and that should be your automatic home run. You should be able to answer that in a way where the people want to give you the job and maybe even more salary.
Yeah, I like that. But again, this is also where many of us might, not make it, because it's like, oh no, because you actually have to be your biggest cheerleader and you have to kind of sell yourself. And that's something you have to articulate, just like you said. And if you can't articulate it, you'll probably not, like, nobody will give you more than what you ask for usually.
Yeah. And actually, and so this is the whole thing is I hear people position it as that, like, you have to be your own cheerleader. And I don't think that's it. I think it's more of, you have to be your own biographer, because it doesn't, like, there doesn't have to be yelling. There doesn't have to be screaming. It's just the facts. No, it's just the facts. And the reality is yes. Because I think that people use that mental messaging to say, oh, that's salesy, when it's truly not. It truly is in the spirit of putting on your own oxygen mask is if you want to be able to get out of W-2 lifestyle, if you want to be able to build a brand, you need to either be building a professional brand, like you do, where you're actually selling services to clients, or you need to be building a personal brand where you're actually attracting people that you want to educate, that you want to serve. And to do that, no cheerleading, no screaming from the rooftop, but you have to be able to articulate your experience, your results, and how you can help them. Like, you have to tell your own story. So I try to position as, you have to be your own storyteller. You have to be your own biographer, and you want to have integrity written on the wall, where you want to say everything that is true and aligns with you, but you want to say it in the best light possible. That's all.
I agree. And thanks for reframing that. I think the way you put that and the way you're using the word biographer there is a lot more aligned also with how I would look at it. So,
well, that's because I was channeling my inner German, saying, I will not be the cheerleader, but yes, I will tell my own story, be my biographer.
Oh man. Yes, exactly. The concept of cheerleading didn't even exist in Germany before the Americans brought it with the American football.
That's what I thought. And my uncle lived over there for a while, so I spent some time in Germany, and I was just like, there's no Germans are cheerleading. That's not happening.
Yeah, not a thing. You're right. We're biographers.
We're biographers. Yeah, exactly.
So, Christopher, one of my favorite questions that I definitely don't want to skip today is, what do you consider a life well lived?
A life well lived is where I am leveraging all of my strengths to educate, to serve, and to connect. I mean, I realized in the first half of my life, I was really focused on building the resume, and it was all about a little bit of trying to showcase. I was really focused on climbing the ladder. As I took some reflection, as I was getting ready to leave, full-time W-2 employment, I was asking myself, like, to your point, like, what is my purpose? Like, what do I want to do? And the three words that came to me are educate, share the lessons that I have learned. Because one of the things I realized about myself is I'm a researcher, and I'm not just a researcher of knowledge that's, already in the white papers or already in the tomes, but I'm a researcher of people. Like, part of my story is I'm happy to chase people down, get on the phone and go, how do you know what you know? So educate people from all the things that I've learned so that they can get to the place where I am sooner and find their lifestyle by design. Number two is I evolved over time into a servant leader at work, and I realized that the best thing that I can do is serve others and teach my sons to serve, and that's in community service, that's in nonprofit service, and that's also in commercial service, right? I mean, as I am serving my investors by trying to provide them the best investments possible, I want to make sure that I am of service to people, because that gives me the greatest gratification. And then also connecting live, connecting other great people. I love it. I mean, when you and Avani came over and we were able to get time together, like, that was great. And I look forward to the next time, because I love connecting with people and connecting other people.
Yeah, I love that. And actually, in much of what you said, I see myself. Like, I appreciate so much to pass on the lessons that I've learned in my own curiosity, just like how you framed it just now. So thank you so much for sharing the path and also being a mentor to me in so many ways, and it was amazing for us to meet you in person in Austin, and hopefully not the last time, as you said. And
Yes.
Where can people connect with you? And, also where can tech employees make sure to connect with you and get, their exit planned out?
I'd say right now, go to techcareersandmoneytalk.com. I'll give you that link to put in the show notes, but techcareersandmoneytalk.com. That is the website for my podcast. I also have a free giveaway there for people who are working for equity that tells you how to maximize it. But there's a contact sheet that you can reach out to myself, and I'm happy to be in touch. But that podcast was created so that there is a resource that we talk about career and money and how does it get you to that path to freedom. So we're breaking down this whole concept of exit, from equity to exit, over on multiple episodes.
I love it. And I've tuned into some of them. It's definitely a deep dive. So I encourage everybody in tech, to go and check it out. So thank you so much, Christopher, for your time. Really appreciate it.
My pleasure. Thank you so much, Hannes.
Thank you for joining us at The Path to Wealth. We hope you enjoyed today's episode. Check out our upcoming guests and be sure to share it with all your friends and family that want to take their life to the next level of wealth.